Nicholas Bornos of Capitalink. I would like to welcome you to the ship finance panel, to the bank ship finance panel. Bank finance has been a very important activity for shipping and for Norway. We have a number of Norwegian and international banks very active in Norway, financing Norwegian shipping and global shipping. So we're delighted to have with us a great group of panelists. I would like to thank our moderator, Peter Aall Simonsen, partner at the law firm of Simonsen, Vogt and Wiig. And Peter, please take over and introduce our esteemed panelists. And thank you all for being with us and making this a great forum and a great panel.
Thank you, Nicholas. Welcome to you all. I begin the honor of mediating, being the moderator for this, not mediator, but moderator for this session. And Nicholas already explained my background. And one thing that I find interesting, just a starting remark here, is that we're now focusing on the future going forward. And the years behind us have been somewhat colored by the restructurings and the challenges for the industry and for certain banks and many of the banks in the industry in general, whilst we now more focus on the way forward and on new challenges and new opportunities. The focus today is on the shipping lending activities from the Nordic banks perspective. We have with us today Joep Gorgels from ABN. That's not a Nordic bank, but they're quite present with an office here in Oslo, and that's amongst one of the panelists today. The backdrop, as I said, is that we've been through a series of continuous restructuring, so to say, and we're focusing forward. Much of the focus today is on the ESG and the ESG standards and how that affects shipping, and then how that affects banking and how banking is affected by it, and then affects the shipping side again. And this context is not only about financing of service vessels for offshore wind industry and other quite obvious kinds of new industries, but also what will actually be the future for the large sector, part of the sector being like bunkers, tankers, containers, cruise, you name it, all the large part of the shipping industry. So the point with this session today is to try to shed a light on how the banks think, what they're planning, and how this will affect their lending activity, and how you, most of those in the audience here today that are ship owners, how you then should think about your own business and your business model, and how you can adapt it to qualify for those types of lending that you'd like to, for those sources you'd like to borrow from. Starting with the panel today, I think that the panelists here are quite known to most of you, especially if you've been into Nordic banking within shipping sector the last 10 years. Nevertheless, I would like each of you to give a short presentation of you, and then again, in order to avoid any questions about seniority and importance, so to say, I decided that let's do it in alphabetic order by starting with the last name. So Niels, if you could just start with a short introduction of you and your bank. You're on mute. Can't still hear you. I think Solveig will just jump over to you whilst you work with your mic, Niels.
Okay, that's okay, thank you. I'm Solveig Froland, and that's a background. I can say that following 20 years in the shipping group of Nordea, I joined GIEK, the Norwegian Export Credit Guarantee Agency, 7 years ago. And I will give you some perspectives from the export credit angle. International shipping companies are attractive customers for producers of maritime equipment, technology that is developed and delivered from a range of Norwegian companies, of which many belong to the SME sector and are located in small places all over the country. Following declining demand from the offshore sector, the industry transition to new markets is a key for preserving profitability and defending a strong global market position. And our mandate as an export credit agency is, among many other goals, to provide buyers of ships built in Norway or ships built elsewhere with equipment from Norway, long-term financing in amounts that correspond to the value of the Norwegian content. Hence, reflecting the order book at our shipyards in recent years, new risks in our portfolio consists of exposure to expedition cruise vessels built for a few well-established medium-sized cruise liners, cable layers, a number of wellboats servicing profitable seafood companies, low and zero emission ferries for domestic use, but also exposure to commodity vessels built in Asia and Turkey. And the portfolio currently stands at about 100 billion NOK. The Norwegian export credit offer has for many years been set up in two, one risk-free funding leg and one leg for risk cover. Both are state-owned, and the two will now merge on July 1st under a new name, Export Finance Norway, with a target of providing a more efficient export credit offer. We expect no change to risk appetite or tolerance, nor to the terms and conditions applicable to the product range. And we look forward to continuing and developing new transactions together with you, fellow ship financing providers. Hopefully, you will find our offer useful.
Thank you, Solveig. Quite interesting to learn about the merger and probably hear more about that today. Joep, could you give a short introduction?
Yeah, Joep Gorgels, heading the Global Transportation Logistics Group. I had the privilege of leading the office in Norway, in Oslo, between 2012 and 2017, and 4 years now into the new role out of Amsterdam. We used to cover shipping globally, but in August last year, we decided to leave the US and leave Asia. So we are now focusing on pan-European shipping and logistics situations for our clients and prospects. And we do that out of our offices in Oslo, in Amsterdam, and Athens. So in shipping already for more than 15 years. And I think we're banking close to 200 clients at the moment in our group.
Thank you. Geir, Atle.
Yes, hi, good afternoon. My name is Geir Atle Lerkerod. I've been in the industry for approximately 30 years now, like a couple of the others on the panel. I'm heading up the shipping side in the bank together with my colleague Tor Erik Beck. So I'm handling the clients on the Nordic space and have done that for several years. I think most know our bank quite well. We have approximately 100 clients plus within the shipping portfolio, and that portfolio sort of reflects the shipping segments as such. So these are the large clients worldwide, sort of 50 to 60% in the Nordics, and the remaining then in North America, in Asia, and in Europe. In terms of size of the portfolio, it varies a bit. We, as others, took down the portfolio somewhat after 2010, 12, but we have also actually increased it a bit during the last 24 months. So been rather active. The portfolio is approximately $10–12 billion. And so that's what we have ourselves. But in terms of arranging and book running, I think that most know that we are extremely active on that side. So a short introduction, Peter.
Thank you. Yes. Christos.
Hello, I'm Christos Tsakonas. I'm heading shipping globally for DNB Bank. I've been holding this position for the last 4 years. Before that, I was running our business in Asia, and before that, I was running our Greek business. Since this is a Nordic forum, I don't think I have to say much about DNB or our presence in shipping. We have a global presence, about 100 clients as well, and we cover about half of our client base is in Scandinavia. So that's all from me.
Yeah. And Niels, finally.
Shall we see if this works? Can you hear me?
Yes.
Yes, we can.
Perfect. I've had the IT help. My name is Niels Bugge. I'm a global head of conventional energy shipping and offshore at Swedbank. I'm based in Oslo, but the bank of course is Swedish. We have a diversified portfolio of shipping and offshore exposure today, and we have sustainability and transitional focus when we work with clients on new shipping projects, primarily focusing on links to the Nordics and Europe.
Thank you. Well, as I said in the start here, I think the interesting part is to learn about what's happening internally in the banks, and in which again external will also have an effect, and already has an effect on how you act externally, and especially in light of the ESG. And then all of you are in the daily top management of each institution's lending within shipping. So just starting with an open question here really is to all of you, how are ESG in general affecting you? And then I think in particular that you have the regulations related to the Poseidon Principles passed by the AMRO, which many of you then have committed to. And then you have, in addition, the taxonomy of EU coming in as well. And then the question is, how does that affect you? How has the day changed since, let's say, 3 years ago? How is it today, and how do you think it will be tomorrow? And a bit open here, we had a discussion prior to this conference, and we learned quite a lot of interesting things from each of you, and each of you actually had quite strong opinions on it. And then anyone wants to start, or just pick one?
I can start.
Yep.
Swedbank is ambitious when it comes to sustainability, and we most certainly have a very strong focus on doing what fits into the transition that is required for us globally to contribute to delivering on the Paris goals. It's a whole host of relevant items that hit us, from policymakers, regulators, the EU. The taxonomy has been mentioned, and funnily enough, we perceive that already now the IMO targets that the Poseidon Principles are based on may be outdated if you take a science-based approach in analyzing their contribution to delivering on the maritime sector's part of the Paris goals. So this is challenging. It's work in progress. It is going to be very relevant for you, the shipping clients that we want to work with, and very relevant for us in the lending institutions.
If I may add, I agree with Niels. I mean, first of all, energy transition for some is probably the best thing that ever happened in shipping, because it has kept the supply side under control. We have an order book that is at the lowest level in recent history, and in most sectors, we see very, very strong markets. But this is not what energy transition is about. We are extremely committed as DNB, and I think the rest of the banks here on the forum as well. This is the biggest disruption that we have seen, in our businesses in recent history, and it's not a disruption that we have decided ourselves. It's the whole society that is shifting. It is our employees that are demanding it. It's our investors. that are demanding it. And as banks, we have a very critical role to play in how capital is channeled and how we enable not only the green technologies, but also transition to the green technologies. Niels mentioned the Poseidon Principles. We've been one of the leading banks in setting up the Poseidon Principles. And last year was the first time that we could actually put a number on the carbon footprint of our portfolio. It's not a perfect tool, but it's definitely a very useful tool, and it's a tool that is evolving as targets are also evolving. The key is that ship owners and banks, we all have to realize that things are changing. We also have to change. We have to change our business model. We have to change the way we analyze risk. We used to focus purely on credit risk and profitability. Now we have to look at stranded asset risk. We have to look at new technology risk. We have to look at what fuel is going to be used. Is the logistics network going to be there? So our job is becoming much more complex to what it used to be before. And the same, of course, applies to our clients as well.
Mm-hmm.
And maybe to add to Niels and Christos, ESG, of course, is a very wide topic. I think another good example is the responsible ship recycling standards that we have implemented already a couple of years ago, where we engage with our clients and prospects to scrap ships after their lifetime in a responsible way, in a more greener way, also taking into account the social aspects of our business at the end of the use of a certain asset. Very important development. I think that shipping banks took a couple of years ago, and many of the banks in this forum are participating in this. Poseidon Principles is another very, very good example where we collaborate, right? Where we work together, making indeed a framework, and then slowly steer towards more greener assets on our balance sheets, measuring and then steering later on. It's indeed in development. We took the initiative a couple of years ago to work with right ships, and we abstained from FNG labeled ships already for a couple of years. So there is ways to deal with this proactively, and I think we're all doing that.
Interesting thing here is how does this affect the customers of the bank? We have earlier today listened to, amongst other, Tsakonas being in forefront of looking at the new inventions of doing shipping, and then from previous discussions, Geir, Atle, I remember that you said that don't forget that 70% or what it is the major bulk of shipping is still bulkers, it's containers, it's cruise and whatnot. And then the question is that if I were a ship owner, what are the banks expecting from me? I can do something, but how much can do? It will take time, it will cost money. But how do you look upon that? What is the expectations or eventually could be the requirements that you would put in the future to those?
Thank you for that, Peter. Well, I think before actually answering that question, I think that's important to actually put demands upon ourselves as well as banks. I mean, if you look upon ourselves as Nordea, I think that we have been very active on this subject for many years, and actually now it's sort of embedded in everything we do, in the business strategy and our plans across. So it's integrated in the way we work, and we have been an active bank and a driving force in the transition to a sustainable economy. And I think that it's the only way to go forward, and we see increased demand also for these, both for products and services, and we have seen that sort of accelerating as well. I think all banks on the pan have done that, but importantly also is to put demands and targets on ourselves, and we have done that as we have released statements on during the years. So I think that's a good starting point, to look upon ourselves first. in terms of what our expectations of our clients, and that goes across all industries, is that they are taking measures to lead the way into the future, so also we can comply with and create a better future for the future generations. I think that you know, the companies within our space, you know, they have been and are very active, and I would say especially during the last 12 to 18 months. I think that we are learning every day, and our clients as well, you know, in the dialogue with ourselves and the other banks on the panel, you know, they're learning as well. And this is something that everybody takes upon themselves. And I must say that the ones that don't, I think will actually have issues, not only getting sort of attractive, competitive financing, but I think also in the next 5 to 10 years, I think that they would have some issues actually getting capital, not just for from the banks, but also from the equity market. So this is something that, you know, it's not a subject, it's not an issue. This is the, you know, it's integrated in the way we think and the way we work. That's, you know, I think it's just a fact of the matter.
Thank you. Can I maybe I can add a little bit from our side. So as you all know, I believe the GIEK has developed the ESG policies since quite some time, really, and we're also concentrating on the full value chain. Of course, there is always discussions how far out you can go, but from the shipbuilding activities here, we have applied ESG targets on sustainability and labor rights and working conditions on the suppliers of, for instance, the hulls that are produced in Eastern Europe and towed up to Norwegian shipyards for finishing there before delivery to the new owners. And that has been, it is a work in progress, and it's, although our clients will definitely continue to meet increased focus on ESG and the sustainability, it is also our target to implement this in a competent and efficient manner in order to reduce the necessary time and costs related to this. And that requires a certain maturity in the way it is handled. So, and when it comes to the effect on the supply and the offer of export finance, we have noticed that the UK Export Finance made a decision earlier this year on halting further financing of new fossil projects. And that is a very powerful signal to the export finance market. And there are also several other EU or other countries in Europe that have started processes towards the same goal. And we in Norway, that is particularly sort of sensitive because oil and gas is still a major industry in Norway. So, but in it, and of course, the effect will be that reduced supply of capital to the fossil sector will make it more important to have to be ambitious on our targets there.
Thank you, Solveig. I think it's quite interesting. We'll come back to more into the details of new segments, technology, and who's left on the station, so to say, here in the end of types of industries. But just following a little bit up on what you said, Geir, Atle, could you be a bit more accurate on what kind of requirements you would expect to see from the ship owners? I understand that many of the ship owners are working on their way of ensuring compliance with this new world, so to say. But would it be possible for you to be more? Do you want to see plans for fleet renewal? Is it what about refitting? Is it the Rome wasn't built in one day, so to say. So what kind of expectations, if you could be possible for any of you to be a bit more specific?
I think it actually comes back to this needs to be science-based. So I think that at the moment we actually see the technology. I think we are in a sort of transition period, right? And I think that's important for all the banks on this panel and sort of the capital market at large to be part of that transition. because this is, as you said, it's not built in one day. I think that the technology needs to be in place as well, and our sort of expectations to the clients is that they as us are driving this transition. So yes, we will put demands upon our clients just as we put upon ourselves, and what we see is that all of the clients are working very actively with this and take it very, very seriously. So I think that any client that wouldn't do that, we would work with, but at a certain point, obviously, and we need to, if that doesn't work, we need to have a serious conversation. But we are not at that point at all. I think that our client base is working extremely active with this. I think that we should also focus, and I think this is what you're alluding to as well, Peter, and we said in the call before this meeting, is also the opportunities that this creates, because I think that's that sort of is missing a bit. I think the next 5 to 10 years will probably be some of the most exciting and interesting times for our industry. We are in a transition. We have a fantastic standpoint at the moment, as Christos mentioned. The supply side is looking very, very good. Hasn't been that low order book for at least 15 years, and we're moving into a phase now where we can create better and more efficient equipment, the ships as such, and could also be that we could attract new capital into this industry. So we as a bank look very, very positive upon the next 5 to 10 years.
Christos?
Yeah, I think it's important to frame the whole issue in a bit of a different light. I mean, shipping transports about 90% of world trade and contributes to 3% of emissions. These are important statistics to keep in mind. And ships don't move around because owners want them to move. They move around because people like you and me, they want an iPhone from China, they want a computer from Korea, they want 3 TVs from Samsung, right? So shipping is contributing to the standard of living that we have decided, we want to have. Now, we turn around and we look at ship owners and say, okay, and to banks and say, what are you doing about making this transportation more efficient? And I will have to say that it is impressive the speed with which the industry is embracing this change. We have short-term and we have longer-term policies that are being put in place, and we have a trajectory set by IMO. Also, the Paris Agreement that Niels mentioned before, which is probably going to accelerate the timetable as well. And the industry has embraced that. In the shorter term, we see changes in hull designs. We see people looking to slow steam and adjust the engines. We see some dual fuel LNG vessels, which are not the solution, but maybe it's an intermediate solution. And then there is a tremendous amount of research and development that's taking place for a more permanent solution, a more green solution through ammonia, through hydrogen, maybe through nuclear. And there is also advanced talk about how you're actually going to fund this. People are talking about carbon levies, and we have been quite vocal about that as DNB. Maybe that is a way to help the markets balance the new technologies. But we should. I think it's important to remember what is the problem, and I think it's also important to remember what is the industry as a whole doing and what direction it's taking, together with concrete measures to achieve those.
So if I then try to sum up just on a little bit there before we move on to the new segments and new technologies, let's say, is that what I hear is that you say that each of you are then doing an internal review and been doing that for quite a while in order to see what do I demand for myself. At the same time, what you say is when it comes to consumers, you don't set these specific requirements on what to do, but that they need to have a plan. They have to have something, they need to find a way, and they have to document it towards you. That sounds like to me that you don't put up exact requirements necessarily, other than, of course, those who are following Poseidon Principles and from taxonomy. That's at least. Do you disagree? Is that
no? I think
the key.
Go ahead.
So you first.
The key word, I think, is transition, and this is work in progress. You're saying that we have spent a lot of time actually evaluating this. there isn't a finished means of target setting reporting available to us yet. We're talking about assets that have an economic life of 20, 25, 30 years. We're talking about developing technologies. We're talking about large-scale production of green ammonia, green hydrogen, whatever bears of energy that we need to rely ourselves upon. So our task, together with clients, is not to disrupt global trade, which is so important, but at the same time ensure that we and the shipping companies accept the transition and that we deliver on what is required. And as Geir said, the science-based target initiative focuses on the delivery of the transportation service and the emissions from that, not on what cargo is transported. That means that we can break down and look at what is critical, as opposed to in the taxonomy, EU has included a cargo rule where they exclude the carriage of fossil fuels and leave the discussion and decision making with regards to, as an example, natural gas to the end of this year. So we're left with a lot of big questions. I think we need to attack them jointly across the industry to be able to succeed.
If I can just add, and I think those are extremely important points. I just want to add, Peter, in respect of what we expect from our clients. One thing that I think that the industry as such, as in terms of the capital side of it, has been that we haven't been that focused on, which we should have, is on the operations of not of the companies, but as such of the vessels. How are they actually performing? I think that's during the last couple of years, 2 or 3 years, I think that us as banks has become more and more interested and looking at that aspect of each client's business on the operations side, and that I think will increase in focus, and rightly so.
You tried to say something here.
Not so much to add. On the other side, I think we have to distinguish the fleet which is already on the water, and the issues around making that fleet greener and in compliance with certain rules, and not only Poseidon Principles, but also the EEDI that comes around already in 2023, where shipping companies have to have their fleet complying to the EEDI, and that becomes stricter and stricter as we go forward. So it's very important to look at this this challenge holistically, and look at solutions, how to modify the existing fleet on the water, wind assistance, air lubrication, different paints, different this and that. There's a lot of stuff that can be done, and where banks also can have a role in to motivate this, but also to finance such. And we tend to always look at the new design, the new building, but that is not the only solution. That's not bringing us far enough. And I think one other thing to add is that all of us more and more look at sustainability linked loans and bonds, where you basically make the performance of the fleet or the company, you combine that, you link that basically with the pricing of your finance structure, and that is a new trend that has not been done much before, and it's likely to accelerate even further.
We have been provided with limited time for this session here, so I'd like to just jump over to another topic here that I tried to then shift over to here a short while ago, and this is Christos, in our last discussion here, I think it was you that mentioned that with new technology, there's new challenges, and that also then relates to how you would do your structure of financing, amongst others, if you have new types of vessels serving new types of segments with new technology. This is something that you like to comment now. I think it's something about the tenors, risks, etc.
No, absolutely. And I have said that I'm a firm believer that the business model of banks is changing, radically. I said before, we used to focus on credit risk. Most of us did a decent job at that. We used to focus on profitability. That's fine. Now, when a client comes and says, I want you to finance the first ammonia run, VLCC, for argument's sake, it's not a very straightforward decision. I don't think any of us here would be comfortable to say, great, 70% financing, sign, and let's do the next one. I think there are very complicated risk factors that we need to take into account. And I think we need to see a number of stakeholders contributing to lift these projects off the ground. You need owners to look at their equity risk differently. You need to have yards contribute. You need to have charterers contribute. And we already see some charterers incentivizing owners, maybe not to the full extent, but to a certain extent, to order vessels with transition type technology. Maybe you need funds that have a green mandate. You definitely need sustainable funds. And this is a market that has grown tremendously, and you alluded to it. So there needs to be collaboration across stakeholders in order to lift these projects off the ground. And I can tell you with certainty that we will definitely get it wrong, all of us around this table, on some of the technologies. That's why it's important to spread the risk around. And that's why it's important to partner with companies and with management teams that we believe are going to be the survivors and the winners of this disruption. Pairing and choosing your clients has never been more important than now. And I think the role of financial institutions will be more of the role of an arranger than purely a provider of capital. We will provide our own capital, but we will be instrumental in arranging, pricing, and distributing these new risks across all the stakeholders.
And one important partner there is then GIEK, Exxon.
Yes, I couldn't agree more.
Absolutely.
So it's yes, definitely. I think we can. Did you want? I could just on a bit on this. Yes.
Yeah.
No, it's very interesting to see the risk that some parties are willing to take, and are very bold in their decision making. And I think, of course, the large ship owners will lead the forefront here, and together with the financing partners and equity partners. It's encouraging to see the increased interest from green funds coming in with large amounts. And I think the taxonomy has helped that in order to make it necessary for fund managers to allocate part of their funds to green investments. And perhaps those funds are willing to take on more risk than other parties for the same kind of payment. So I think all countries with their export credit financing offers are willing to take on more technology risk on their own industries than just the pure commercial players. But I don't think you shall expect that this field of technology risk will be covered by the ECAs only, because the risk, we are in the sort of the left corner with risk and reward. So there must be more powerful efforts. And in Norway, we have a number of contributions for environmental investments, and those are distributed from various offices, and that includes also equity support.
Yeah, sounds interesting, and from a lawyer's perspective, quite interesting. We're more complex and larger projects where all parties need to chip in and find a workable solution and a risk profile that is acceptable for each participant.
You are safe, Peter.
Thank you. Then we are then Nicholas left with I think a couple of minutes here, and then I think the last things that I'd like to touch upon here is that, which of course is not maybe not that relevant for all of you, but what about the others, so to say? And talking about the others, is this transition at least from what I can understand, it could be challenging. Somebody mentioned the EU taxonomy banning fuel transportation just like that. It's a no-go if you want to be to get the right labeling. You have smaller owners with less means to adapt to the new world, and other that you can see project financings where the project house puts up one project with 1, 2, or 3 vessels, which would be limited what they can do. What will happen with this? Anyone that has any idea? Are we talking Chinese lease? Are we talking, is there kind of a market with banks that only do kind of not green financing and then have a higher cost? Or
I think you alluded to it yourself. A large part of what will take care of the issue you point at is consolidation into larger, more professional companies.
I mean, very quickly, because you touched on a number of points. I mean, smaller companies, 1, 2 ship companies, challenging going forward. A lot of regulation, a lot of bureaucracy, difficult to remain competitive. So Niels is probably right. We will see more consolidation. I think this is expected. When it comes to taxonomy, when it comes to banks, I think Western banks, definitely, not only because of regulation, but because of internal desire from employees, from management groups, from shareholders, definitely will embrace the shift. Maybe other regions of the world will be more keen to finance segments of the industry that are not, that are not green or do not want to change. But with the EU clamping down, with the US clamping down, you need to figure out where you're going to trade your ships if you don't comply with certain regulations. So a lot of uncertainty and huge disruption in business models that both owners and banks have to think through very carefully.
Yeah, and I think it's not only the pressure from banks here; it's also the charters combined in the sea cargo charter nowadays, which is similar to Poseidon Principles. So, the cargo owners, the charters of our ships, will not allow us to do anything different than this. Secondly, we already see since the last 10 years that traditional bank finance is maybe not the primary stuff to go to. There is definitely alternative funds coming up. There's leases of all sorts. So, it might well be that there is that's going to divert further.
So interesting what you say is that if you then took into account, if you look at the new types of projects and technology, you would see that it's a diversification on those, in the perspective that you need owners to step up on the equity commitment from charters, commitment from all various parties. You need ECA financing and so on. And then on the other hand, you look at those not qualifying, they would then need to look at other alternatives. It could be the bond markets or family offices, Chinese lease, all the lease structures. So it looks like a more diversified financing structure going forward. But that for the banks, it's might be that the larger, more professional owners will be the preferred customers, at least it might say, from the perspective of the banks then. That though not excluding smaller that comply at all, but that it will be more challenging environment for them to adapt to. I think that's anybody else that have any comments there on the end of this session? Good. Yes, Niklas.
Well, thank you very much. As expected, a particularly interesting and spirited and insightful discussion. So thank you, Peter. Thank you, Solveig, Joep, Christos, Geir, Atle, and Niels. Thank you so much.
Thank you.
Thank you, Niklas.
Welcome. Bye.